The single objective of starting a business is to make profit. So we should be clear in our minds about what is profit. If I ask you to give me a definition or a formula for profit, chances are one would say profit is income minus expense. Do you all agree with this formula for profit? Let's take a quick example. Let's say somebody starts a business. In that business, this person invests 500 and purchases a machine. Then you spend another 200 on raw materials. Then you hire people and spend another 50 on salaries. And now the product is ready. So they go and sell it. They sell the product for 400. What's the formula for profit? Income minus expense. How much is the income generated by this company? 400. How much is the money spent by them? 750. Has this organization made a profit or loss? Now, money coming in is 400, money going out is 750. Chances are some of you are thinking they made a loss, but others are thinking, no, they made a profit. So those of you who are under the impression they are making a profit, my question is, are you doubting this definition of profit now? Are you saying profit is not income minus expense? Or are you saying that the formula for profit is correct and this company has made a profit? If you're thinking so, you're absolutely on the right track. And let me put your answer in technical words. The little confusion here is due to the loose use in English of two accounting words. There are two words in accounting which in English we don't bother to differentiate. We treat them as if they mean the same, but accounting says they have distinct meanings. There's a word in accounting called expenditure. There is another word in accounting called expense. Very often in English, we treat them as if they are interchangeable. Guys, in accounts, what does expenditure mean? Expenditure refers to spending. Expenditure is an outflow of money. And folks, every time you spend, it has two options. That spending will either create an asset or it can be an expense. Folks, I'm trying to tell you the word expenditure is broader than the word expense. The word expense is a subset of the word expenditure. Now tell me, what did we write as definition of profit, as a formula for profit? Did we say profit is income minus expenditure, or did we say profit is income minus expense? The word used over here is expense. But that 750 is expenditure. So those of you who are saying the definition is correct and this company has made a profit are actually saying, Anil, profit is income minus expense, but you have gone and written against expense the entire expenditure. So how do we arrive at profit, guys? In order to arrive at profit, we will have to divide that 750 into an expense component and an asset component. And now income minus expense will be profit. Which is why two statements are prepared, not one. Not one meaning income inflow minus outflow. That is also prepared. It's called the cash flow statement. But if you wish to arrive at profit, if you wish to understand profit, you need to prepare two statements, a statement called profit and loss account and a statement called balance sheet. Guys, every time money comes in, you have to choose. Is that money coming in income or is it a liability? Every time money goes out, you have to choose. Is it an expense or is it an asset? And profit is not money coming in minus money going out. It is this income minus this expense that appears in the P&L. Remember, in one of the earlier videos, I told you can imagine your accounts as a box. Every time a transaction takes place, you write on a piece of paper and drop it into the box. And now if I bring this box to you, and you are asked to prepare a profit, loss and balance sheet, all you need to do is put your hand in the box, take out one piece after another, read what is written on that. You will discover, first of all transactions can be broken up into those that bring money in and those that take money out. And if money has come in, you have two choices. It is either an income or a liability. If money goes out, there are two options. It will either be an expense or an asset. So folks, imagine this is the box that I spoke about. I put my hand in the box. The first piece of paper says sales. I apply my mind. Has money come in or gone out? Seems to have come in. If money comes in, my options are it will either be an income or a liability. Sales looks like income. Second piece of paper says salary. This time money has gone out. My choice is expense or asset. Salary looks like an expense. Raw materials purchased also appears to be an expense. Machinery purchased must be an asset. Now tell me, folks, has this company made a profit or a loss? Now it looks like they have made a profit. But hold it, hold it, hold it. You may remember in one of the earlier videos I had mentioned how to choose whether money spent is an expense or an asset. And I said the ultimate test is the fact of consumption. If the item on which you spend the money has got entirely consumed before making the balance sheet, it will appear as an expense. And if it is not consumed on the date of the balance sheet, it should appear as an asset. Folks, you realize right now we are guilty of looking at the item and deciding whether it is an expense or an asset and not examining the consumption aspect of it. And therefore, because we didn't look at the consumption, chances are all the three items on which money has been spent, our conclusions can be wrong. There can be an element of error. For example, the first piece of paper was salary. What did we assume? We assumed it's an expense. Is it possible that the salary is not an expense or a portion of it is not an expense? Let's take a silly example. When do organizations pay salary? Usually at the end of the month. January salary would probably be paid on 31st Jan. Let's imagine this organization has a policy of paying salary at the start of the month instead of the end. So January salary is paid on 1st Jan, not 31st Jan. Why do they do that? Maybe some consultant told them. How does it matter? Why not give salary at the beginning of the month? Just 30 days in advance. But in the process, what will happen? Everybody's morale goes up, productivity goes up. Silly advice, but they followed it. 1st January, this organization distributed salary of 50. Now imagine halfway through the month, the managing director calls up the accounts department and requests, can you give me a quick profit and loss account for the last 15 days and a balance sheet on 15 Jan? This accountant discovers in the last 15 days, this organization has raised invoices for about 400. Shows it as income. Then he looks at the salary. How much salary has been paid? 50. But folks, 50 is the salary for the entire month. Sales is the income of 15 days. We got to apply the test of consumption. How do you apply the test of consumption? You must try and create a nexus between an item that appears on the expenses side and the income side. Ask a few questions to establish consumption. What kind of questions? How much did you spend on salary? Not important. What is important is, did you spend that 50 in order to earn that 400? Did 50 get consumed in the process of earning 400? If you wish to earn 400 again, will you spend another 50? Unless the answer to all three questions is yes, 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 it's not an expense. Let's ask this question to salary. Did you spend 50 to earn 400? Answer is no. Did 50 get consumed in the process of earning 400? No. If you wish to earn 400 again, will you spend 50 again? Answer to all three questions is no. Then the next question is, how much did you spend in order to earn 400? Arithmetically speaking, half the salary is consumed, half the salary is not consumed. So if this organization prepares a profit loss account for the 15 days of January and a balance sheet on 15th Jan, how will they show the salary? 25 will appear as an expense and the remaining 25 will appear as an asset on the balance sheet of 15 Jan. What if this organization prepares another profit loss and balance sheet on 31st Jan? What appears as an asset on 15 Jan bounces back as the expense of 31st. Lesson number 1, guys, please remember, there are no permanent assets. What is an asset today could well become an expense tomorrow. Same question to be asked about raw materials. How much did you purchase? 200. Not important. What is important is, did the entire 200 of raw materials get consumed in the process of earning and selling goods worth 400? Or is a certain portion lying in your warehouse? If a certain portion is lying in the warehouse, that much component of raw material will appear on your balance sheet on the asset side as inventory. The balance will be shown as an expense. Same question to be asked about machine. Did you buy a machine worth 500 just to earn 400? If you wish to earn 400 again, will you have to spend 500 again? What if the answer was yes? In case the answer is yes, even machine appears as an expense. Folks, just because the label calls it a machine doesn't make it an asset. But what if our study shows no, I did not buy a 500 worth of machine just to earn 400? My perception is, I'm not a magician, my perception is, because I bought this machine worth 500, I think I will not only earn 400 this year, I'll probably earn another 400 next year, another one next year, another one next, maybe 10 times. Folks, common sense will tell me now. If a single expenditure of 500 is going to help inflate the income side of 10 successive profit loss accounts, then common sense tells me why should I burden the expenses side of a single P&L with the whole amount? That's not fair. I said, this is not an expense, this is an asset. But the moment I call it an asset, I'm still not happy. I say, I agree, I did not spend 500 to earn 400, but it is equally wrong to say, I spent nothing to earn 400. If this 500 worth of machine is going to help me earn 400, 400, 400, 10 times, but out of 10, I've already earned one. Now I'm going to earn only 9 more times. So if not the entire 500, 1/10 of 500 I should show as an expense. So I reduce the asset by 1/10, bring it down to 450. And the 1/10 component goes to the P&L, which will appear there under a description called depreciation. So folks, tell me, what is depreciation? Can I say depreciation, therefore, is the consumed portion of the so-called asset? And you and I have agreed whatever is consumed is an expense. What is an asset? Can I say asset is the unconsumed portion of the expenditure? Different ways of expressing the same thing. What question did I ask you? Has this organization made a profit or loss? Under this set of assumptions, it looks like they have made a profit. How much is the income of this organization? 400. How much is the expense, total of the expenses side? 300. How much profit have they made? They have made a profit of 100, let's say 100 crores. How much profit have they made? 100 crores. How much is the bank balance of this company? How much money was received? 400. How much money was spent? 750. What kind of bank balance do they have? They have a bank balance of negative 350 crores. Lesson number 2, folks. Don't ever make the mistake of thinking that profit is equal to money. Profit and money have got nothing to do with each other. It is absolutely possible your company makes lots of profit and you don't have money. It is equally possible that you're sitting on huge amounts of bank balance and you're still not making a profit. I've often emphasized on the fact that business is all about bottom line, not top line. We are in business to generate profit, not sales. But now my question is, are we in business to generate profit or are we in business to make money? I stand by my earlier stand. Business is all about profit. But folks, there is no pleasure in making profit if at the end of the month you don't have money to pay salary. Or I'm trying to tell you, successful organizations stand on 2 pillars. Pillar number 1, ability to generate profit. If your organization is making a profit, you have won half the battle. The other half of the battle depends on your ability to effectively manage cash flows. Folks, if you can do one and not do the other, the organization will still get into serious trouble. But take care of these 2 pillars. And I think from a finance management perspective, most other things will take care of that sense.